Hello, chart watchers, and welcome to this Thursday, November 1st Market Watchers Live show with your hosts, Tom Bowley and Erin Swinlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. The Dow Jones Industrial Average trying to continue its winning streak, up nearly 200 points this morning. The S&P 500 up 17, the NASDAQ up 73, and the Russell 2000 showing some leadership again today, up 22. The 10-year Treasury yield potentially reversing. We'll talk about that in a bit, but it is down 2 basis points, 3.14%. Volatility index, after reaching above 27.5 3 or 4 days ago, earlier this week, we are now down below 20. The VIX is down nearly 9% today with the surge in the S&P. Materials leading to the upside today. Gold having a strong day. The dollar, not so much. The dollar had been in a beautiful rise here over the past 2.5 weeks, but we are down on the dollar today, and that is encouraging traders to move into materials and especially gold. Industrials also having a pretty nice day to the upside. Commercial vehicles and trucks continuing their winning streak off the recent bottom. And one of the stocks in that space, Oshkosh Corp, reported blowout numbers, top and bottom line. You can see the stock up 18%. Leading the commercial vehicles and trucks higher. Erin, it's Thursday. I cannot believe it is November. Where in the heck has 2018 gone?
I know. I have to totally agree with you there. It does tend to fly by, especially as we get older. So I've noticed.
Yeah, I was flipping channels last night, and I have to admit, Family Feud was on, so I stopped for a second. And one of the questions that came up was, which month does Christmas shopping begin? And the number one answer was October. And I'm thinking, wait a second, we're past October. We're getting close to Christmas. This is unbelievable.
Yes.
Yeah, it's kind of crazy how fast the year goes by. It seems like every year the years go by faster. Is it just me?
No, I think it's there's the space-time continuum, as we get older, things do feel shorter. I don't know.
I don't know. Something's going on. There's something in the air. Anyhow, I know we got a busy schedule. I know you've got your DP report
Yeah.
monthly. So let's get into it and let everyone.
Indeed. All right. So looking at our upcoming schedule, tomorrow we have what's hot, what's not. Looking forward to that as always. I will have a workshop on Tuesday, and I believe I'm going to do it on the straight shots, DecisionPoint straight shots. So we'll talk about that. Brian Livingston will be with us on Wednesday, and Thursday, Grace and Rose should be joining us. So looks like a good upcoming week to start off November. Today's agenda, I will be doing the DecisionPoint monthly review. All of those monthly charts went final. Time to look at them. 10 and 10 to 1, our first symbol will be Ralph Lauren, RL, if you want to go take a peek. And we'll finish up. Tom is going to do chart breakouts so we can see what's going on there. But it's time to get started. So let's do it, Tom.
All right, sounds good. Let's first take a look at some of the key economic reports out today. There was a few of them. Initial jobless claims, of course, that comes out every Thursday. 214,000 versus 212,000. No big shakes there. Q3 productivity came in almost as expected, just a slight miss, 2.2% versus 2.3%. Then later in the morning, we got October PMI manufacturing index, which came in just slightly below expectations, 55.7 versus 55.9. Then the ISM manufacturing index came in, missed by a little bit more, 57.7 versus 59.1. And then September construction came in flat, and the market was expecting a 0.2% rise. So when you look up and down there, not a whole lot in terms of misses, but all 5 of them were a little bit disappointing. And so when we take a look at the 10-year Treasury yield and what's going on in the bond market, kind of about what I would have expected. The 10-year Treasury yield coming down a little bit, down 1.5 basis points, and potentially putting in a reversing candle here. And of course, if we top in the 10-year Treasury yield in the short term, that means money's rotating into Treasuries, which is defensive, and that could be problematic. Now, of course, tomorrow morning, we can kind of throw all of this out the window because that report tomorrow, the non-farm payrolls report, kind of trumps technicals. For me, it's like the market getting its earnings report. the non-farm payrolls tends to have a very, very big influence on what happens in the stock market and the bond market. So tomorrow morning, anything goes. But I just wanted to point out that that potentially is a reversing candle. And if for some reason the jobs report, maybe, I know we had a strong one with the ADP employment report yesterday, but if for some reason we disappoint tomorrow, we could see another drop and maybe another push back down toward that 310 level. And that would mean more money rotating into treasuries. And that might not be a very good thing for the stock market in the near term, but I'll talk about that more in just a minute. First, let's get into some of those earnings reports because they are still coming in fast and furious. Last night, Express Scripts came in, 243 versus 242, Suncor 73 versus 71. And then, of course, you can see some others that came out this morning. Nothing overly inspiring from those numbers. I would say Cigna had a pretty good beat there, 384 versus 344, and we'll look at that chart in just a bit. Cigna looking pretty good on the chart. Do want to mention, though, in addition to non-farm payrolls tomorrow morning, we have Apple reporting earnings after the bell today. So the market has two massive things to digest before we open again tomorrow morning. We're going to have that Apple report and non-farm payrolls. Who knows which way we go? Apple tends to come through with their earnings reports, so I'm assuming that will probably be okay there. The question is just whether or not Apple is, after the run-up that it had in the sideways consolidation, is it already priced in for a beat? And I think that's what the market will maybe be telling us. But first, let's take a look at ESRX, Express Scripts. So on the chart, we did try to break out here earlier today. We had a move up to almost $99. We did reverse back down. ESRX did beat on the top line, beat on the bottom line, and looks pretty good on the chart as well. There is a pending acquisition by Cigna on ESRX, though, so that's something that traders need to keep in mind. SU, which is Sun. We did beat on the bottom line, 73 versus 71, but we're in a downtrend. We opened up higher, and you can see we did trade about a 6-day high earlier today when we hit 34.40, but we're now back down to 33.46. So the market wasn't very inspired by this bottom line beat. RDS/A, which is Royal Dutch Shell, came out. They did beat, they matched expectations on the bottom line, 68 cents for each. And you can see today's action down a little bit, down fractionally. But we did get up, almost test that 20-day moving average yesterday, and now we're starting to roll back over. So technically, we got some issues here. DWDP, Dow DuPont, big gap up above the 20. We went below the 20 earlier. Now we're trying to get back up above. A close above, I think in the short term, would be a pretty bullish sign. We came up a little bit short on revenues for DWDP. But bottom line, we beat 74 versus 71. Shire, SHPG, really strong looking chart here, by the way. We're down today 1%, but yesterday we closed at the highest close that we had seen over the past 6 months. And if we stretch this chart out, and let's go back a full year, you will see that that also is the high close throughout 2018. So pretty good action yesterday heading into the report. You can see the volume was pretty strong last few days on the move up. So SHPG on a relative basis, if we look at it versus the S&P 500, first of all, it's in that pharma space, which has been pretty strong. But if we look at it relative to the S&P 500, check out the relative strength. And part of that is because it is in a strong group, and it's actually starting to even turn up higher relative to the pharmas. So strong report, beat on top line, beat on bottom line, looks good technically. This is a stock certainly you could consider. Pull back down to that 175 level, I think would be an interesting area for entry because you would have the 20 and 50-day moving average supporting you at that price. CI, this is Cigna. Cigna came out, beat top line, beat bottom line, really blew away the bottom line, 384 versus 344. Gapped up, but you can see the high literally came up almost right to fill this gap from back in January where we had the huge selling, continued to sell off back in March, a lot of selling. It's taken us 8 months to get all the way back up there. Finally, we filled the gap. Short term, I think maybe we pull back a little bit, but Cigna is in that strong healthcare providers area, which has been one of the leaders, even though we've pulled back here in October. I think what you're going to see, Cigna strengthening relative to the group, Cigna strengthening relative to the S&P, and the group continuing to strengthen relative to the S&P. So I think Cigna looks pretty good here. Question is, can we hold that rising 20-day? If we get down there, I think we will. A couple other interesting reports that came out that you might be interested in. Fitbit, FIT, beat on the top line, beat on the bottom line. They guided the next quarter higher, and this is a stock that had been downtrending for quite some time, getting a really nice pop. Overhead resistance just above 6.25, so we want to watch that. I think maybe we could pull back from that level, but a move back down to test the top of gap support at 550 would be an interesting area for possible entry because we are seeing strong volume on this push to the upside so far. One other I mentioned earlier at the opening, Oshkosh, OSK, and here you can see the reaction to its earnings report. It had been beaten down over the last 4 to 6 weeks, started to rally heading into its earnings, and then really had a good report. $2.06 billion in revenue, market expecting $1.98 billion. Bottom line, $2.05 versus $1.78, and you can see the result. Market loving, traders loving the report, gapping up, and we continue to trade much higher since the open on very strong volume. So I think all of that is good. When we pull up a relative chart, you can see the stock had been under a lot of pressure. When you look at the group, the commercial trucks and vehicles had been under a lot of pressure also to the downside. This had been a weak stock within the group, the relative to the S&P week, and the group relative to the S&P week. This is a little unusual to see a report coming out like this, and this clearly could be a game changer. Watch that 67.5 area. You got the 50-day moving average and what should be some pretty stiff price resistance at that level. If we can get through, I think that would be a really good signal for OSK. One other chart, and this is what I typically look for when I'm looking at relative strength or weakness on stocks. MD, Mednax, they missed on their top line, missed on their bottom line, guided lower, and this is the hints that I look for heading into an earnings report. You've got healthcare providers moving higher, but Mednax MD was moving lower. So on a relative basis, you got one of the worst stocks in the healthcare providers group. Relative to the S&P, it had been very weak, and yet its group had been very strong versus the S&P. So obviously a lot of traders were rotating away from this particular stock, even though it was in a great space. And then today they, basically deliver a bombshell with MD missing top, bottom line, guiding lower. This is kind of what I would expect when a company is underperforming on a relative basis. I would be careful in stocks like this. Let's go real quickly through a couple of charts. XLK, and this is one of the reasons why I'm still a little nervous about this move to the upside in the market. You got the XLK coming up still below that 20-day moving average. How about the XLC? XLC right on the 20-day. XLY, these are aggressive groups approaching the 20-day moving average. The XLI, not even close to the 20-day moving average. How about the XLF? These are the 5 aggressive groups. None of them are above the 20-day moving average right now. Maybe we get that move with a good solid non-farm payrolls report tomorrow, but I don't know. How about some of the industry groups? Software tried to get through the 20-day yesterday, failed. Today, not even participating in the move. How about internet? DJUSNS also not participating, down today with the market higher. Couldn't get through the 20-day moving average. Financial administration stocks. This has been a great leader throughout 2018 and even prior. Look at the failures on these 20-day tests. Again, we've got a group that's not participating today. How about the telecom communications equipment or telecom equipment stocks? Again, failures at the 20-day, barely participating today. And then one more in the financial space. How about the reinsurance stocks failing to get through the 20-day moving average and hovering below? So some of the leaders that we've seen previously in 2018 have key technical tests that we're dealing with right now. I think we have to be careful here with the market, and let's see what happens with the non-farm payrolls report tomorrow. Erin, upgrades, downgrades?
Yep, let's get to it. We got a couple here for you to look at. All right, first of all, let's look at BHP Billiton. It was upgraded today by Investec from a hold to a buy. A couple of things to note on this chart. I mean, obviously we have a nice big gap following what could have been somewhat of a breakaway gap. This does look kind of runaway to me. And we do have the PMOs now starting to turn right back up. And then I like the volume coming in here on that rally, and you can just see it right here. You don't even have to look at the OBV. OBV reaching above where we've seen it all year. So I thought that was a nice looking chart. Let's go ahead and move on to the next. SeaWorld Entertainment also upgraded today from a sector weight to an overweight. Characteristics to note on this chart. First of all, that 2050, and I'm going to direct you to the thumbnail, that 2050 day negative crossover. That gives us a neutral signal in the intermediate term. So I would be a little careful with this one. We don't see the PMO. It hasn't quite turned back up yet, but we are getting some pretty good volume coming in on this rally to the upside. So just keep an eye on it. I don't like that signal, but it could just be coming in really late. So we'll have to see about that. Next upgrade, Valero Energy. Credit Suisse upgraded this from sector perform to outperform. You know, flat PMO. It really wants to turn up on this rally, but it has not been able to. Again, decent volume here on that rally, but we got stopped up right here at this resistance level. And I marked it because this was for 2 months about we were traveling within this consolidation zone. So I was looking at it, and I actually used my auto support and auto support resistance lines from the annotation tool. And I just went ahead and outlined that consolidation zone. And when I came back over, I thought it was very interesting that we failed to get back above that yesterday, even on the rally. So long tail, as I see, as Tom talks about, that we got yesterday at the end of that rally. So it is upgraded. Investors seem to be liking it okay, but not as nice looking as some of the other charts. All right, other big name upgrades that I didn't go over the charts. Chesapeake Energy, CHK was upgraded. Nutrisystem was upgraded by 2 agencies today, NTRI, and Roku was also upgraded today. So let's go ahead and we'll look at the next. Let's start downgrades. Autoliv. We have Longbow. They downgraded this from a buy to a neutral. I actually like this chart. So on a downgrade, I mean, I don't know. I think it looks pretty good here. You can make your own decision, but you could see that we're holding up this breakout that we had, that really short-term breakout. If you look here in the thumbnail, or even down here, we broke out above that. We've held that. We have a 520-day EMA positive crossover, so that's a short-term trend model buy. We're already on a PMO buy signal, and it is rising out of oversold territory. And look at the OBV, the volume, and look at the scooter. It is flattening right now, the scooter, but I really think this is a pretty nice looking chart on the downgrade. All right, Diamond Rock Hospitality was downgraded by Wells Fargo from an outperform to a market perform. It's having trouble at some pretty important overhead resistance here, and it's failed. It managed to get back up. It managed to get above it, but notice it did not really close above it. And now we are back down below that area of resistance. So I do like the PMO. It is rising at this point, but I don't really like this pullback here that brings us back down below support, which is now resistance. And the last one we'll look at is Pfizer. Pfizer was downgraded today by BMO Capital from an outperform to a market perform. I like this chart, even though it is downgraded. I'll tell you why. A few reasons. I've got a breakout from this declining tops trend line. So we were in a declining trend, and now we're starting to pop out of it, which is positive. We were downgraded today. Pfizer was downgraded. It's up 1.4% despite that. and the PMO is trying to make the turn to the upside. And then notice, you can see it in the thumbnail, we have rising bottoms here on the OBV, and I find that to be positive when you compare it to the bottoms that we saw up here, which are also rising. Other big name downgrades I didn't go over. Honestly, there were none. I checked. There were really not any other real interesting downgrades for you. And that concludes the upgrades and downgrades. And now it is time to get into the DecisionPoint monthly review. So let's go ahead and do just that. Okay. All right, here we go. This is the DecisionPoint monthly review. We are looking at the October charts, which just went final yesterday on Halloween. And what I've decided to do is I'm going to go over pretty much just the monthly charts because it is a Thursday. The weekly charts haven't closed out yet. I'll be going over those on Monday. And the daily charts, I mean, we look at those pretty much all the time. Mm-hmm.
I just have a black screen right now.
Oh, okay. Thank you for letting me know that. Let's try this for now. That's a little bit better, right?
Yes, we're good.
Oops. There we go.
Well, that's, yeah, it's the review.
Yeah, there we go. Right?
Yep.
Okay, good. All right, so I'm just going to go over the monthly charts today because, like I said, the weekly charts haven't gone final and we look at the daily charts all the time. So I'll be looking at the large cap indexes that are on our DecisionPoint scoreboards. I'll be talking about the mid and small cap indexes, and I look at the ETFs for that. The big four, UUP, the dollar, gold, oil, and bonds. We're going to look at those as well. I want to cover some indicators that are a little bit more long-term. The Swenland trading oscillators, which tend to be short to intermediate term. We'll look at the ITBM and ITVM. I have some interesting things to show you on the PMO analysis chart. And I saw something interesting on the advanced decline chart for the S&P. So I'm going to go ahead and go over that as well. All right. Well, first of all, here are the DecisionPoint scoreboard changes that we've had since October started. I think it's pretty obvious what direction we went to in October. And of course, we all in our portfolios know what direction we went in October. But I wanted to just show you all of the signal changes that did come in. You know, if you notice, the PMO signals, at least on the S&P 500 and 100, we had those in early September. And I know we did have a whipsaw buy and sell, but basically we were already being warned in early September that there was a problem with momentum. And, you know, the follow through in October, we certainly saw the NASDAQ and Dow also move into these sell signals. So something to note, the midterm signals are determined from weekly charts. We're going to actually be looking at the monthly charts, and those we get these signals from. The long-term PMO signals come from the monthly PMO, so on the monthly chart. So I'll be looking at these weekly charts, which is where you get these signals on Monday. So you'll want to stay tuned for the DecisionPoint report on Monday if you want to get more information about the weekly charts. All right, so let's go to stockcharts.com and look at some of these monthly charts that I have for you. All right, and you see the right thing, correct? You're seeing my, I just want to make sure you're seeing the right thing here. Okay.
Yeah, I'm just looking at the ticker cloud.
Yep, that's what it should be right now. Okay, excellent. All right, so I'm going to start off with the Dow. We're going to look at, again, monthly charts only today. I wanted to show the Dow. One of the problems I'm finding on all of our monthly charts for the large cap indexes, and honestly for the other indexes, is we still have a long-term PMO, and it is topped and it is continuing down. We don't have a long-term PMO sell signal yet. Those only go final at the end of the month. So on October 31st, wherever the PMO is located, that's where the signal is. You may call up a monthly chart, later in the month and see that sell signal in there, but the sell signal is not final until the end of the month. So I just wanted to make sure that everybody understood that. So I'm looking at a very steep rising trend that we have been on for the Dow. And the problem I have is that we did break down below that and we closed below that rising trend. So the rising trend from 2016 on is in jeopardy right now. We have broken down below that rising trend. The good news, I suppose you could call it, is that in the much longer term, we do still hold that rising trend that really started back in 2009 with the move out of the bear market that we saw in 2008. So from then on, we're looking at a secular bull market that has been going on for quite some time, and we can still continue that if we hold on to that rising bottoms trend line. But of course, even if we want to continue this bull market and we do go down and test that rising bottoms trend line, we're looking at a move down below 23,000. So we can maintain the bull market in the longer term, but we might have to absorb some difficulty in the future if it decides to go down and test that. You can see in the green, of course, that is so far today, how it looks on the monthly chart. And at this point, we are below that rising bottoms trend line. So something to keep in mind. The NASDAQ monthly chart. Let's see here. All right. So what I've noticed also on some of the other large cap index charts are rising wedges. Rising wedges are bearish patterns, and the expectation is a breakdown below about the length of the back end of the wedge. So really, when I look at this, we did have a puncture of that falling wedge, but it didn't quite close there. We managed to close within the wedge. And, trading so far today, again, this is one day on a monthly chart, not to be taken too seriously, but we are back within that wedge. So that's good news, at least for the NASDAQ 100. Bad news is the PMO has topped, and you can see how close. It was just a sliver that prevented that long-term PMO sell signal. And, you'll notice on these monthly charts, I've marked where the last few sell signals have come in, the clean ones, mostly clean. Like I didn't count this because more of a whipsaw considering, it moved sideways. So, but these are the serious breaks on the long-term PMO, and it's pretty accurate as far as catching bear markets and declines. So we really don't want to see the PMO sell signal here. We could luck out and just end up with, a little bit more on the correction side to bring us toward the bottom of the rising trend channel, the longer term bull market. But again, that could be very painful with a drop down, below the, looks like 6,200 level. So something to keep in mind there. All right, monthly chart. Here we go for the OEX, S&P 100, similar look. In this case, it looks like we have the sell signal, but it isn't final. Like I said, hasn't gone final yet. We do have the PMO topping, and it was in decline nearing that sell signal when this chart went final yesterday. And, the good news is it is trading back up above that rising bottoms trend line. So, but it is still looking at a bearish rising wedge. All right, the one everybody's been waiting for, right? The S&P 500 monthly chart. Again, rising wedge to be concerned about. I didn't put in the longer term, secular bull market rising trend line, but I think you get the idea. So we do show a PMO sell signal on this chart. Again, that will have to go final at the end of November, because at the end of October, it was not there. And if you want to see the monthly charts without today's trading on it. I did write an article and went over all of these charts in writing in the DecisionPoint blog that I wrote yesterday, October 31st. All right, let's look at the S&P 400. The mid caps and the small caps are very worrisome right now. We were in an we didn't have a rising wedge on the S&P 400. We had a rising trend channel, and we have now decisively broken down below that. And decisive breakdowns are a breakdown of 3% or more. And we certainly did have that closed below. You can see that the 6 and 10 month EMAs are about ready to give us a negative crossover. So I'm really not liking the 400. My concern is that with the S&P 400 and small caps, I'm going to show you this pretty ugly chart as well. In the case of the Russell 2000 rising wedge, but again, a decisive breakdown. And we did get that PMO sell signal yesterday on IWM. So hopefully we'll be looking at just a little bit of a correction like we saw on this particular sell signal that came in. But, you know, we've seen previously where these sell signals can turn out to be quite painful over the coming months. So right now I'm a bit concerned because this, if you notice with this crossover, it's almost, the PMO is moving almost straight down on this sell signal. And that means we're going to get a fairly clean sell signal. So, all right, let's go ahead. I'm going to show you some of these indicators that I promised. All right, so we're going to start with the short-term indicators and some of the issues that are going on, and I'm watching very closely right now, some possible negative divergences setting up on this chart. We already had one, as you can see, and these negative divergences, I mean, they're pretty right on. They don't come around that often on the STOs. It's always interesting when we do, because generally they do lead into declines, possible corrections even. So right now, if you look in the thumbnail, we have positive readings on the STOB, but we still have negative readings on the STOV. And, you know, if we top off on the STOV before we pass above this previous top, that will give us a negative divergence. And the thing you need to know about these indicators and most of the DecisionPoint indicators is that we generally have a breadth version and a volume version. And if you don't see the same participation of the volume indicator in line with the breadth indicator, that is a negative divergence that is telling you that volume is not supporting the current move to the upside. So that's why we watch that very closely. Right now, we don't have it, but we do have positive readings on breadth and negative readings on volume. Intermediate term indicators, ITBM, there you go, breadth, and the ITVM, volume. So these are the ones that we do watch closely for negative divergences as well. You can see we haven't had one. They were both declining. The tops were both declining. Now we've hit very oversold territory, and we are seeing them turn to the upside. However, we have had some head fakes along the way. In particular, this one we saw back in mid-October. So I'm not going to get excited about these bottoms on these indicators until we get close to a positive crossover of the signal lines. And honestly, I'd really want to see that positive crossover of the signal lines before I get too bullish in the intermediate term, as far as these indicators anyway. Yeah, you can see the PMO is starting to hook back up and around on the daily charts here, as far as the daily PMO. So that is positive. You know, at least we're seeing on the S&P 500, we're starting to see the PMO make a turn to the upside. Let's see, I wanted to show you. Let's see. Yes, here is the advanced decline chart that I wanted to point out. And again, breadth, volume. And what I wanted you to notice is that volume is not supporting like the breadth is at this point, this rally. the good news is if you go to the really short term here on the advanced decline line in the thumbnail, we are looking at readings. If we do top off here on the advanced decline line, we will end up with, there won't be a negative divergence here in the very short term, nor in the longer term here. But what I want you to note is the pullback here on the net advanced decline. So the advances, we saw a pullback. We've seen a pullback here on the net advance decline as well for volume as of yesterday. And so I would be a little concerned about that because, we're on a rally right now, but breadth yesterday really didn't support it like it did the day before on the 30th. The other one I want you to see is our PMO analysis chart. There we go. And the PMO analysis chart, what I love about it is it gives me the short term, the intermediate term, and long term all on one chart. And I did a workshop on this, big picture indicators, where I showed you a couple of the DecisionPoint charts that we do have that show you short, intermediate, and longer term for a particular index. And we do have these for more than just the S&P. I can also show you for the NASDAQ. And here's one. I don't have it quite formatted for you, but you can see what's going on with the NASDAQ as far as the buy signals in the short term, intermediate, and longer term. So if you are interested in these PMO analysis charts, they are in the DP Market Indicators chart pack, and they are already provided and set up for you. You can, adjust the time frames, etc. But let's go back to this chart. All right. I think it is very positive that we see a move in the shorter term of PMOs rising. The percent PMO rising, PMOs going to the upside, the percent of those in the S&P is 61% as of yesterday. And we do see a nice move above the previous top that we had. We're seeing in the intermediate term, and these are the ones that are on buy signals, so that they've had those positive crossovers. That's an intermediate term look. And that percentage is still very low. We still have less than a third of the S&P on buy signals. Obviously to be expected on a correction like this. And they are improving, but not very much, and especially in the long term. Right now, only 20% have a PMO that is in positive territory. And that's a long-term look. But you want to have the PMOs that are positive. That tells you that there's internal strength. And we only have 20% of the S&P right now showing that kind of strength. All right, let's go ahead and get into the big four. Go back here. Again, we're just going to look at these monthly charts. I will give you, like I said, a full daily, weekly review of these charts. I will do that for you on Monday. So you'll see the daily and weekly charts as well. But today, just the monthly. All right, dollar looking quite good. I think it's we knew that as we've watched October move through. We had a 2.25% rise in the dollar, and notice also it has closed at a high past what for the year. It's the high for the year is what we closed on at the end of October. I think that's quite positive. Notice this monthly PMO making such a nice move, taking a little longer than I would like to get to that buy signal, but it does look like we will get a nice buy signal on the monthly chart for the dollar. So my expectation when I look at this, again, you can even see a 6-10 month EMA positive crossover back here earlier in the, let's see, at the end of the second quarter, mid-year. So everything looks good on the chart. I am bullish on the dollar. I'm expecting it to move higher. The next area of resistance will be these highs that we had back in 2015. And I don't see why the dollar would have a problem testing those highs at this point. The chart looks too good. And gold, on the other hand, As many know, gold tends to have a very strong reverse correlation with the dollar, meaning if the dollar is doing well, gold typically is unwell. So you're going to see a similar chart, only a little bit opposite here. The one good news that I have when I look at this chart, obviously the bad news is this PMO sell signal on the longer term monthly PMO. But I think there's a little bit of good news here for gold, and that is that it is managing to cling to this support here at about 1160, 1170, 1180 area. It's holding that, and it's holding above, of course, this declining tops trend line, which is super long term here, coming, starting from back in 2011 through 2012. It's that declining tops trend line, and it is managing to hold on to that. I've been watching, I know it's a big sigh. I've been watching the daily charts for gold, and actually I'm going to cheat here a little bit. I'm going to show you the daily chart for gold. Been watching it very closely, and of course, note this is as of the close yesterday, not taking into account what's going on with gold right now. But I've been watching the correlation between gold and the dollar, and what I have noticed is that it's actually moved into positive territory, meaning that they're closer to traveling together than they are traveling opposite. But there's still pretty low correlation, at least in the shorter term. But I think the good news for gold is that it isn't that tied to the dollar right now, because if it were, we'd really be seeing bigger declines for gold. But I am concerned about gold. It's managing to hold up, like I said, and I think this area of support is going to hold up again if we do move lower, and it does appear we might, because that PMO sell signal is on tap here. So watching gold closely. Got a breakdown short term, but I think we should be able to maintain support here at that 1180 level. So again, when you look at the monthly chart for gold, there you go. We are holding that support, and I think that's very important, and I suspect we will continue to, despite this sell signal. I will be watching to see if we can't get this PMO to start decelerating, though. At this point, it's still just moving downward, and we're not getting a turn. But it's only been 1 month that we ended in the positive, a nice positive exchange here to over 1.5%. Gold was on the rise last month. All right, 2 more to go. Oil, monthly chart for oil. This is WTIC. I usually use USO, but I do not have, we don't have the same kind of back data for USO that we have for WTIC. So that's why I'm using that. Big concerns for me when I looked at this chart. Number one is, and actually I think if I were to fix this a little bit more here, it's rising bottoms trend line. Yeah, that's a little closer here. We've broken down below it, and we closed below it. We had over 10% drop for WTIC. I suspect it's time in the longer term. We're going to start seeing lower prices here. And as far as the monthly chart is concerned, I think you could see prices drop to test support all the way down here at 55. You have a PMO that is topping, but it's only topped for this month. So I want to see a little bit more follow through. This breakdown is not, in my opinion, decisive. So I would like to wait and see if we get that decisive breakdown, because we may be able to maintain here. But a big problem, on the monthly that we really didn't manage to, we challenged those previous tops, but we weren't able to close at them. Alrighty. And our final chart. And here we go. I've been showing this monthly chart for quite some time, even in my DP alerts that I just do weekly on Wednesdays, because I think it really tells a story about bonds and the big problem and the possibility of even lower prices here right now. A couple of major problems on the monthly chart for bonds. Number one is a head and shoulders pattern. a very long-term head and shoulders pattern that did execute, moved below that neckline. And when I did the measurement, we end up with a correction in bonds all the way down to 120 for the USB. That's a long way down. Obviously, there are some areas of possible, where it could turn it around, but I am not looking for it to manage to make an upside turn. I think we will see the fulfillment of this head and shoulders pattern. And part of the reason is this PMO that has been moving almost straight down all the way since 2016. We already were getting some information there. I suspect it was after the big decline. Unfortunately, I don't think it predicted this big decline, but it certainly predicted the bigger move to the downside. And it's still continuing downward with no deceleration. And in fact, if I look at it in the thumbnail, it looks like it's accelerating downward. And now we are reaching readings that we have not seen since 1984. And it could be that we might go all the way down to readings from 1983. And I would not be surprised to see that. I think bonds, I'm very bearish on bonds. I suspect we're going to see, certainly in the longer term decline, to test this area along that rising bottoms trend line, but more so testing that area just about 128, again, for USB. All right, so let's go ahead and conclude this, get our conclusion. All right, and you can see that. All right, so here's my summary as far as the month. Large caps, the issue is a lot of support levels have been broken. The rising trends in the, for the cyclical bull market are starting to fade. We've had those rising wedge executing, and those monthly PMOs, some of them are very close to sell signals. And in fact, I think we saw in the OEX that we already had a long-term PMO sell signal. It's just we have to wait and see if that sticks around November 30th. Mid caps, those I thought looked, mid caps and small caps, particularly bearish. You're on those long-term PMO sell signals. They've come in, and we've seen a decisive breakdown as far as the S&P 400 from that rising trend channel. And small caps, the rising wedge executed, and I would say somewhat decisively. We've already got that long-term sell signal, and support is being tested at about 140 for IWM. I'm concerned that these mid and small caps could bring down the large caps coming into November. But if we're starting to see a little bit of a rally going on, at least the last few days, I'm not going to get too excited, but we might be seeing a little bit of a turnaround here in large caps. And of course, I think that the mid caps and small caps could follow on to that, but we're still not looking at a strong uptrend at this point. All right, and looking at the big four, the dollar is, it's at fresh highs for the 2018. It's getting ready for that buy signal on the monthly chart. Gold, on the other hand, not quite so bullish, looking a little bit more bearish. You've got the long-term PMO sell signal, and that's been in play for a while. We're not seeing any deceleration on it, but we also haven't seen a true breakdown below that support level about 1160, 1180. And I think that is somewhat positive. Probably has a little bit to do with, seeing that correlation changing, that we didn't end up with, the big problems there. It's still clinging to that support, and I think that's positive. Oil PMO is topped. It's barely holding on to that rising trend. I suspect we're going to see more downside in the longer term. Bonds, definitely bearish. You just saw that chart, pretty ugly. And as far as indicators, volume is just not supporting the rise on the short-term indicators, and I am happy the intermediate-term indicators are turning up, but I'm only giving it a somewhat bullish, not a bullish, because we don't have those positive crossovers. PMO analysis, is telling me long-term is still very bearish. We need to, again, be aware that we might get some moves to the upside in the short and intermediate term, but overall, there's a lot of downside pressure. showing right now in the longer term. And advanced decline, like I said, negative divergence volume doesn't seem to be supporting this current rally. So something to be aware of. And that pretty much concludes my monthly report for the month of October. So I hope you have gotten what you need from that. I think we could pull up the poll, Tom. You want to look at that?
Sure.
Yeah. Let's see what we have. All right, so I thought today I'd ask, since I'm going over all those monthly charts, what charts do you typically use when you trade, for your entries and exits? I'm not surprised that 2/3 said the daily chart. While I am an intermediate term trader, I still like to use the daily chart. So what did you put, Tom?
Well, I would typically, since you used that word in there,
Yes.
I typically use the daily chart. But if I'm not sure on a chart and I think it's at support on the daily, a lot of times I'll go to the hourly chart and see if I have a positive divergence on a recent pullback. And sometimes that will be the final straw that'll encourage me to take a position.
It's a confirmation tool, really.
Yep.
And I honestly, I go the other way. Sometimes I'll look at the weekly chart to confirm what I'm seeing on the daily chart. So, of course, you can go backwards as well, but.
Yeah. I'd go the other way typically with the weekly. Sometimes if I'm just trying to get a sense for the big picture, I'll use the weekly. I can understand where longer term traders and investors would probably make decisions on the weekly. I just kind of get the weekly for kind of a directional thing. Okay, is the stock uptrending or is it downtrending? And if it's uptrending and I really like it based on, say, recent earnings reports, and it's pulling back on the daily, to a key gap support level or moving average or trend line or something like that, then I usually will pull the trigger if I'm good with the overall market. And like I said, occasionally I'll then go one step further and pull up that hourly chart.
Sure. And if you recall yesterday, Dr. Elder talked to us. He typically uses a weekly chart for trading. And a lot of people asked, his chart style is available on stock charts. Just go to the chart styles and that drop down and just scroll down to the bottom. You'll see Dr. Elder's. All right, but it is time for the 10 and 10. Everybody be patient. I obviously have been talking this whole time, so I have not checked out our symbol requests, but I'll be doing that busily in the background. Go ahead and like some of the others. The first symbol we already know, and the second symbol is going to be the most popular. So let's go ahead and get started, Tom.
All right, we are going to go with Polo Ralph Lauren, ticker symbol RL. I was looking at the chart, and clearly this was a not so great candle when we moved down about, $12 or so that particular day, and the volume picked up. However, when I look back, the recent high in January, which was a pretty significant high because we consolidated for a few months after that, and gap support, the bottom of gap support, both came in around 115 to 117. And if you notice, that low went right down into that support zone and then bounced. I believe it was October 15th that we got earnings on RL. So I think right now the stock's just kind of trading in this range. I could trade it on the near term if I use the 20-day moving average as my support. But if I'm looking back at the low in October, then I don't see a trade here, because the move to the downside to test support would be probably $13, $14. And the move back up to the resistance area would be about $13, $14. And so to me, that's a coin flip. But I do think from a shorter term perspective, if you like that 20-day as your support or gap support from just a little over, or less than a week ago, then I could maybe set up a solid reward to risk trade here. So for me, I'm just watching it. I'm still interested. It's in that clothing and accessories area, which has struggled in October, like so many areas of the market. But I haven't given up on that space yet. So I think RL would just maybe be on a watch list for me right now.
All right, let's see what the most popular is. Still frantically looking at these others. Most popular, we do have a tie. And we did look at, no, it's not a tie anymore. Micron is going to be the most popular. So you've got MU.
Well, actually, I did that one yesterday. Do you want to pick a different one?
Well, it's the most popular. So you're allowed to look at it 2 days in a row if it's most popular.
All right, I'm allowed. It's right. If I had traded it here in the last couple of days looking for a bounce, I would take my money and run and see if it can close above this 20-day moving average. As I talked earlier in the show, I had pointed out a number of key areas of the market sectors, some individual stocks and so forth that are coming up, hitting 20-day moving averages and struggling to get through those. I think here we've got a couple of key areas on Micron. You can see the lows that were established all the way back at the end of 2017, early 2018. We never had a close below about $39. That changed with slightly increasing volume just toward the end of October, and now we're coming back up, and we're getting into this zone between about 39 and 41, and we are testing the 20-day. And if you look back, I mean, yeah, we did break up temporarily above the 20 and got to the 50 a couple of times, but over the past, I'm going to say 9-10 weeks, we have not been able to close above the 20-day moving average. So it's in a weak area of the market. You've gotten a nice bounce the last few days. Again, if I was in it, I would take my money and run.
All right. And the one that almost tied, I'm going to go ahead and make that the third one, KEM, Kemet.
KEM, okay. And I do want to just remind everybody, I look at the market from a fairly short-term time frame. So when I say take the profits and move on, I might re-enter a stock if it gets through some key areas of resistance. If I really like the stock, maybe it's on my strong earnings reports, come down, lost support, and I'm playing it for a bounce, and I get it up to that resistance level, I get out. If I can get through, sometimes I might get back in. But anyway, just wanted to clarify there, especially for anybody who might be new to the show. Great volume here on the break and the gap up recently. Now, I don't like to chase because a normal pullback could easily go back down to the 50 or maybe to gap support. But this is one that I would keep on my watch list. If you're following KEM, I would have no problems putting it on a watch list and looking around that 19 and a half area right in here. This is where we got the gap up, the big volume. When we sold off down to 19, that's where we found the buyers. So I think 19 to 19 and a half could be very, very interesting on any kind of a pullback, maybe even that 50-day moving average. But I like that PPO turning positive right there. Maybe just identify that. You can see we failed to do that back the last time we rallied. Couldn't get through that center line. We're doing it this time. I see some real positives here, but I don't like to chase, so I'd see if I get it on a pullback.
All right. Next one, consumer discretionary, New York Times, NYT.
No fair. Chart breakouts, I have this one listed.
Oh, no.
That's all right. We'll maybe just pull it off of there because I'm going to show you right here. It's a nice breakout. I think the stock had been in a sideways consolidation. You can see this low back in February around 21 and a half. We came back down, tested it again in September, got close back here in May. 21 and a half, 22 looked like it was pretty solid support. The high that we had a double top here, close to a double top June, July. Tested it again in October, pulled back. So this range, this consolidation zone from about 21 and a half to 27 came off of an uptrend. So I would have been expecting a breakout, and we got that breakout today. I think the breakout looks good. Volume is picking up. Now, somebody who follows maybe negative divergences might look at this and say, well, what about the fact that the PPO is less while the price is higher? Well, we don't know where this breakout's going to go, and the breakout is on big volume. So I find it difficult to argue slowing momentum. I mean, this is just a formula. So this is telling you that price momentum is slowing. But if I've got heavy volume and I'm breaking out to a new high, it's hard for me to argue that momentum is slowing here. So what I would do on the breakout, I think you can still buy a breakout with heavy volume, but I would not want to lose my price support. So I'm going to say 27. You want to hold on a pullback on New York Times. Otherwise, I expect it to go higher. I like this. I like this breakout here.
All right. Big gap down today for this one from the energy sector. Ballard Power Systems, BLDP.
Yeah. I think when you're in an overall downtrend, I'm going to go to a weekly chart. I thought this one's been downtrending really since a year ago or so. Stock was up $6. Now it's all the way back down to $3. The problem is when you're uptrending and you break your trend line and then you begin to downtrend, you start showing lower highs, lower lows. I think the 275 area here on this weekly chart is going to be really important. Going back to the daily chart, I think the first area to watch is going to be this June low because we don't want to start setting a pattern of lower lows, lower highs. So if I was in this one, hopefully you didn't hold in. I think this might be earnings related. I thought I remembered seeing the ticker earlier, but anyway, hopefully you're not in this one now. I would be looking maybe for some support around 265, 270 area. And if that level fails, especially if volume picks up, I would be out of the stock.
All right. The next one, Universal Insurance Holdings, UVE, was our only financial requested.
All right, UVE. I like the long tail because that should provide some support down here if we get back down there. That's where a lot of the buyers jumped in. It also happens to be where you got some pretty good gap support from that gap up back in July right here. So you can see right there, see the gap, and check out the volume down here, pick up. So that's where you gapped up, you kept going higher. So that should provide support. And look where we got to with this tail from just back on Tuesday. Went all the way down on massive volume. As soon as we hit that level, buyers came back in. So I think it's pretty clear to me that the key areas on this chart, you've got resistance up near 50. You've got support maybe around 38.50 or so. I think if we begin to drift back down as we get closer to this support area, 38.50, 39, the more I might be interested. I'd want to see what the overall market's doing and so forth. But UVE, I think, still is in an uptrend and is sideways consolidating at this point.
All right, let's see. Next one. Let's look at Johnson & Johnson, J&J.
Okay, J&J. Actually, before I even do this, I want to pull up that relative chart because I think when you look at J&J, the chart overall doesn't look too bad, but its relative performance, it's in the pharmas, and its relative performance to a number of these other stocks within its group, not very good. So here's the pharmas, J&J going along for the ride, but when you pull up the relative strength, you can see that it reached a high nearly a year ago and has been downtrending relative to its peers. So I don't like the relative strength of J&J, but the overall chart itself isn't bad. You might even argue maybe a little bit of an inverse head and shoulder breakout recently, but I do still think that we've got some overhead resistance to deal with. And again, we've got a stock in the space that's not particularly strong. So on a relative basis, I should say. So I think as we get up closer to 143, 145, I probably would be out of the stock and maybe looking for something else in the space.
All righty. Next one, Kronos, CRON.
I think this is in that marijuana area, I believe.
Could be, yeah, biotech.
Yeah, and I was talking about the fact that this stock had broken down recently. You can see on a relative, well, first of all, biotech's weak versus its peers. This stock's been very weak over the last 5-6 weeks relative to the S&P. It's been weakening, and the group relative to the S&P has just broken to a low. So before I even look at the absolute chart, I think you can see that there are a lot of issues here with the CRON. Now, the thing that bothered me the most, though, was, and I think when I was talking about the marijuana stocks recently breaking down, and for some reason I'm thinking this is one of them. Maybe I'm wrong. But anyway, this breakdown right here took out a double bottom just below $9. We had been consolidating off of an uptrend. So, of course, I'm expecting the breakout. But instead, we broke down. Now, if there's one saving grace here, it's that as we made this breakdown, the volume relative to what we saw on the upside has been pretty light. So I think we got a couple of things to look for here on the stock. Number one, if we do continue to bounce, I would be watching price resistance and that 20-day moving average, which are both just below $9. To the downside, if we continue to weaken, I think we've got a couple of levels here that are going to be really important. And that's going to be down anywhere from about 4 3/4 to about 560 or so. And we are in a downtrend. I wouldn't be shocked to get down to this area. But this, from a more intermediate term perspective, would be major, major support on CRON.
Okay. USCR, US Concrete in materials, building materials, but industrial.
Yeah. Did you say USCR?
Yep.
Okay. Yeah, nice move today with some volume. The overall group has been incredibly weak. The stock relative to the group has been very weak, and same goes for the S&P, and same goes for the group relative to the S&P. So if I look at a chart like this, I've got to find there's got to be something that is really appealing to me. Now, we're having a nice day today. I don't know if this is earnings related, but if it is, this could be maybe a change in character, something I might want to watch on a watch list. But given how weak the group has been, the stock has been, I probably would be passing for now, other than maybe just, again, using it as a, or maybe adding it to a watch list. First thing that it's got to do, I know intraday it's doing it, but on a closing basis, it's got to get back up above that 20-day moving average. So let's see whether or not we can hold that. That would be the first step in repairing all the damage that's been done here.
Okay. Next one I have is Olin Corp, a materials commodity chemicals company, OLN.
Yeah, another one that's in that material space. And again, you've just got a group, the industry group is broken down on an absolute basis. The stock is one of the worst within that space, obviously underperforming the S&P, and the space has been horrible relative to the S&P. So again, what I'm looking for when I look for stocks, I'm a momentum trader. I'm looking for charts that are going up from left to right, and all of these other relative charts doing the same thing. And here we've got the exact opposite. So I'm not trying to bottom fish. That is not my style. It might be your style and others out there, and I think that's great if you get it to work for you. But that's just not my style. So I personally would avoid the stock. And I'm going to just say, very similar to the last chart, what I would be watching for first and foremost is, can we get back up above that 20-day moving average? We haven't been able to do it over the last 2 months. We've been going straight down. And check out the volume. A lot of distribution here taking place. And I think if you go back and see what was going on earlier this year, big volume selling, you get a bounce and it doesn't last. You start moving back down again. So we're in a bounce phase. I just don't know if it's going to last, so I'm going to pass.
Okay. And the last one is Corning, GLW.
All right. I thought, actually, I've done 10, I think. Yeah, I've got 10 that I've listed here.
Oh, okay then. No problem. Sorry, guys, you're not going to see Corning.
I guess I can do an 11th one if you want me to.
Sure, why not? I got everybody. Whoever it is whose symbol that was is going to be kind of upset that we didn't do it. So,
all right, GLW. Yeah, I like the move today back up above the 20. I would have been a little afraid yesterday, actually, with that shooting star candle and the failure at the 20-day, but we are getting through. And we might see this happen in the overall market. I mean, I'm still bullish the market. I'm not, in a bear market, you expect those 20 days to fail and go to new lows. I think right now in the short term, with a lot of these failures at the 20-day that we've been seeing, I think maybe we could pull back, but I'd be using the pullback to buy, to be honest. I wouldn't do that in a bear market. So Corning, though, is breaking out. And just to kind of point that out, let's see. Yeah, right here. This is what I'm referring to. But you can even go back here and see this prior high from a few weeks ago. See that long tail gets up close to the 20-day, and then the sellers come right back in. And then we get up, we fail, we pull back, sellers come back in. That tail and breakout above the 20 would have worried me yesterday. To be honest, if I had gotten in somewhere, lower and I saw that candle, I probably would have sold it at 355 yesterday and probably been looking at it wondering why I didn't hold it. Well, actually, I wouldn't have been wondering. I would have known why I didn't hold it. But here, this is a nice breakout. And I would actually be watching now the price action from that high, that first reaction high, because volume, there was a lot of selling, a lot of volume taking place there. And that's where the buyers kind of disappeared, was at about 33 and a half or so. So this move, I think, has a shot up to 33 and a half. Notice that 50-day moving average sitting at 33.51 right now. Clearly, a breakout and close above that level would be important. But until I see it, I might be a little cautious here.
All right. Then that concludes the 11 and 10. Here are the symbols that we just went over. I will have these up in the Market Watchers live chart list right after the show. and you can copy those charts. You'll see all the annotations. You can copy the chart styles. So great place to go. Just go to the blogs tab, click on the Market Watchers Live blog, and there you go. You'll find the link right at the top. All right, time for our final market update. Let's see what has been going on. All right. As you can see, the Dow is now trying to make some highs a little bit higher than we saw yesterday. It looks like we've fallen back just a little bit, but we are still up over 187 points right now for the Dow. S&P 500 also trying to test those highs from yesterday. The NASDAQ, however, already, it beat out highs from yesterday early in the morning. It consolidated, but it looks like it might be trying to make another move to the upside. OEX is trading mostly sideways, but is up 6.25 points. The S&P 400 mid-caps have been on a steady rise, as well as the Russell 2000 all day long. So good news for mid-caps and small caps in the very short term. TSX, Canadian markets, are up right now 76 points at this point. TNX is lower right now. It did start higher on the day, but it has pulled back, and we are looking at readings of 3.136% for the 10-year Treasury yield. Big gap down for the dollar UUP, and is now testing intraday lows. Consequently, we see gold made a nice big upward gap in the morning and is now creating new intraday highs as we speak. TLT is mostly unchanged, down 3 cents, but it did start the day lower and has spent the rest of it making up those losses from the open. USO, not looking good here. We are down over 2.5% for USO, currently at 1344. And look at that reverse flag on this 10-minute bar chart. Pretty ugly. As you saw in my monthly report, I am bearish on oil, and I continue to be even in the short term as well. Okay, that completes my portion of the final market update. What do you have, Tom?
Yeah, I'm just going to go into the sector scoreboard here, the sector summary, because one of the things in trying to evaluate this bounce, the market was certainly due for a bounce. We had a terrible October. We've been going down in so many areas. We needed a bounce, and we're getting it. But one of the keys is evaluating that bounce to see, okay, how much of it is aggressive areas leading, how much of it is defensive areas. And I'm going to say at this point, I'm not overly impressed. You can see that 2 of the 3 areas leading today are the industrials and consumer discretionary. And while I like that, I think that when you look at their charts, though, we still haven't gotten up to the 20-day on the XLI. And when you look at the XLY, same thing. We still haven't gotten up to the 20-day. The areas of the market that I thought had an opportunity to really do something here to the upside, when you look at technology, we're up a little bit, but this one's closer to the 20-day and not able to get through. And communication services, which houses internet and some of those stocks, check out here. I mean, this is one that with today's move to the upside could have really made a big move to the upside and gotten through this 20-day moving average. And yet on a relative basis, it's underperforming and struggling there. So I just think we have to be really careful here. I think, again, when you go back and you look at the sector leaderboard, I have some issues with some of these groups not participating to the extent that I would like to see them participate. Many of them did great yesterday, but we had a lot of room to the upside before we hit resistance. Now today, with not a whole lot of room to resistance, we see some of them struggling to move higher. And that, to me, is a little bit of a concern. Individually, if you take a look, for instance, at the communication services group, internet is a really big part of it. We saw Facebook trying to break out with its earnings report yesterday, couldn't make it. And now look at internet with the market seemingly doing really well. It's flat today, and it's not participating. And this is one of the areas that the market looks to for leadership. And you can see after the gap up, we have really gone almost nowhere on internet stock. So yes, on the surface, it feels pretty good. Underneath the surface, I'm not buying into this rally just yet. Again, longer term, I think we're still in a bull market. I'm just not sure we don't roll over one more time. And I think tomorrow is going to be key with that non-farm payrolls report. Okay, that is it for the update. We do have one final segment, chart breakouts. And you might think, well, how can you have chart breakouts with a market as weak as it was in October? Well, you still have areas of the market that do pretty well. You also have stocks and areas of the market that are approaching some, key areas. So first, what I thought I would do is just start. I'm going to go through the sectors and just give you quickly some of the industry groups within each of the sectors that I think looks somewhat appealing from a long perspective. So if I find individual stocks that maybe are looking like they might break out or they are breaking out and they're in these industry groups, I might be a little bit more excited about them. So let's take a look first within the communications services space, the DJUSWC. And this is your mobile telecommunications group. October doesn't look bearish to me when we look at this industry group. We had a nice breakout. Look at all the tops coming in here around 360, 365 for about 3 months. We got the breakout about a week and a half ago, 2 weeks ago. And notice on the pullbacks, we're holding a rising 20-day moving average. I look at this chart and I say, what correction? Doesn't seem to be one here. So I think mobile telecommunications is an area that looks pretty good to me right now. Now, again, we start breaking down on some of these charts, I'd be careful. Broadcasting and entertainment, it's not a breakout yet, but when you look at the overall market, look at this double bottom, really triple bottom going back to the July low. I think off of an uptrend, we're sideways consolidating. A move through 1340 would be a pretty significant breakout here in broadcasting and entertainment stocks. And of course, Disney is one of the companies, one of the big prominent companies in this space you could consider. But DJUSBC is an area within communication services that I think looks interesting. Let's move on to consumer discretionary, XLY. Now, again, chart doesn't look very good. Here's the downtrend. We're bouncing last couple of days. So what could look good here? Well, I think the retail apparel space continues to look very good. After a move up, I think we're sideways consolidating. The last week or so, you can see a big move up. We're not far from breaking out in apparel retailers. So this is a group that I would consider. Notice the pullback earlier today was to a rising 20-day moving average. Many of the areas and stocks that we've talked about so much over the past few weeks are below their 20-day moving averages. Here we have a group that's actually moved back above and so far holding it. So this is an area I think looks appealing. How about restaurants and bars? We've talked about how the strengthening there has been pretty nice. I think, again, this is another one. You look at October and you say, what correction? Yesterday, we were just setting a new high for the last several months in this group, pulling back a little bit. But I'd say overall, this is a nice looking area. Moving on, XLP, consumer staples. This chart actually looks pretty good. Money's been rotating towards defense as the market's been pulling back. And we actually have a breakout in consumer staple stocks. I think that's bullish for the group. So where might we look here? How about in the healthcare? Or no, that's not the one I wanted. I'm getting ahead of myself there. Let's take a look at the non-durable household products group. Breakout occurred a couple weeks ago. Right now, we're trading at what would be another high for the last 6 weeks in this group. So this is a space that I think is worth looking at. How about sodas, soft drinks? Erin and I have talked quite a bit recently about Coke, certainly having a breakout, and I'll pull that chart up for you a little bit later. But the overall group, not far from a breakout. And drug retail, breaking out today. So even though we keep talking about how awful the market's been, you can see from these charts, there are areas that you can get involved in, especially these defensive areas, I don't think present the significant risk that some of the other high growth stocks present if the market rolls over and we begin to see high volatility rule again. Energy, XLE, I didn't see any of the groups looking good. As we look into the financial space, again, the overall group, not great. But looking inside the group, how about the insurance brokers? Beautiful move up here over the last week or so, maybe a little more than a week. Yesterday hit a high of 314. That's not far from the high we saw back in July. Now, we don't have the breakout yet, so maybe I'm a little premature in pulling this one up, but this is one that I think looks pretty good, especially inside the financial sector, which has been so weak. How about healthcare? Healthcare, really struggling. Can't get back through the 20-day moving average. What looks good there? Well, I mentioned earlier when we were talking about Johnson & Johnson, pharmas. Now, the pharmas need to get back through these 2 moving averages, and I would say right now we're pretty close to this downtrend line. I'm not quite ready to say jump on board with these pharmas, but I think if it goes much higher from here, I think it is breaking out of a potential short-term channel that, where we've just seen a little pullback. The prior uptrend, very strong, obviously. The DJUSHP, this is the one I was trying to jump ahead to. Healthcare providers. Now, I don't like the candle today. If it finishes like that, I don't like false breakouts intraday with the recent low right here. You can see that PPO below the center line and accelerating to the downside. So a lot of times I look for failures at that 20-day moving average. That's what it looks like we have here so far. So unless we strengthen in the final few hours today, this is a group I'd be careful of. Probably is not appropriate for this chart breakout at this point. Industrials, materials, I didn't like any of the industry groups there. So let's move on to real estate. XLRE. Here you can see we are trending higher over the past few weeks, and we're trying to hold on to what's now a rising 20-day moving average. So what looks good here? Let's start with the residential REITs. And I see what could be off of an uptrend, an inverse head and shoulder. Left shoulder, neckline, lower low puts in the head. Here is the move up to put in the right side of the neckline. Look at that false breakout, by the way. We come back down the next day, which is what I'd expect. And now potentially putting in that inverse right shoulder. This is a group that if we can get a move back up through about 198, that would be a breakout. I think this is a bullish pattern. How about retail REITs? Here, you've got a really nice move over the past few weeks. We're pulling back, but breaking back above both these moving averages. Nice breakout there. And now we're pulling back to test those moving averages. The DJUSDT, diversified REITs, same thing. Again, not really liking today's action, moving above the 20 and then coming back down below again. Let's see how we close here. But it is in the real estate space, which I think looks pretty bullish on a relative basis. Diversified REITs, the last one here. Actually, no, I just gave you that one, sorry. Let's move on. Last one is utilities, XLU. And again, defensive area, been printing higher highs, higher lows, just broke out within the last 2 weeks, pulling back but getting close to support. What looks good here? Well, conventional electricity, I think looks pretty good. Just broke out 5-6 trading days ago, pulling back near the support area. This is a group overall, looks pretty good. Okay, so what about individual stocks? I'm going to go through these pretty quick. But how about DAR, Darling Ingredients? I believe this one is in the Staples area. Yeah, food processing. I think this is a stock looks pretty good. Nice breakout here. Look at the volume coming in, clearing that August high. This is definitely a breakout. Oak, mentioned KO. We've talked about this one quite a bit recently between Erin and I. Here is the breakout. A lot of sideways consolidation off of an uptrend. The breakout occurred a couple of days ago. Maybe we get a little bit of a reversal, but anything back down to test that 20-day moving average, I think looks good here. JCAP, some of these stocks you might not be aware of. Jernigan Capital. Here is a big, big breakout. We gapped up above resistance, pulled all the way back to that 20-day moving average, and now we are shooting higher. Nice breakout on JCAP. CIM. This is Chimera Investment Corp. Went up, and the reason I'm putting this one here, this is either a breakout today or a false breakout. It's going to be one or the other. We got a nice setup heading into today. We gapped up. We were trading up above 1880, clearly in breakout territory, and now we have reversed. If we don't go back up and close above 1860, 1870 here, I would be concerned in the near term. Because if we get this failure, I think maybe we go back down, test that rising 20-day. But overall, I like the volume trends. I think eventually this one breaks out. WSR, Whitestone REIT. Look at the breakout here. I think it's pretty self-explanatory. PPO coming up from underneath the center line. Momentum is building. Volume is coming in on this breakout. And again, it is a REIT. So the downside, not going to be nearly as significant as some of these high growth stocks that are getting hit so hard over the past month. Zotis ZTS looks like a nice breakout, double top around 93.5, 94. Can we make the breakout on the close? You can see a lot of indecision with these tails coming out both sides on this candlestick. So bulls and bears, think of a tug of war, with the rope back and forth. That's what this looks like to me. Let's see who wins into the close. New York Times, we can scratch this one. Looked at it earlier on the 10 and 10. Final two, Dollar General. Nice breakout today. PPO accelerating to the upside. Only thing missing is some volume here. But the breakout was already made 2 days ago. Volume there was just kind of average. So if there's one thing missing on this one, it would be volume. And the last stock, GLOG, gas log. What is not missing is volume. We have plenty of volume to support this breakout. Nice double top breakout on volume. Pulled back basically to the 20-day moving average and prior resistance, which becomes support. And then boom, heavy volume breakout today. I think GLOG looks good. Let's summarize those stocks that we just talked about. Didn't summarize all the individual, well, actually we did summarize all the individual industry groups. And then at the bottom there, you can see the stocks that we talked about. Erin, I don't know about you, but another show just flew by. And what does the afternoon hold for the stock market? That's my question.
I know. It's just been very interesting seeing this rally over the last 2 days. Now it's time to test the veracity.
Well, I will say here just recently, even just in the last 15 minutes, we are seeing a lot more movement upside in the NASDAQ and NASDAQ 100. Russell 2000 now today up more than 2%. So if I'm just going to show you here on the home page, but check this out. I mean, the Russell 2000 now up 30 points, more than 2%. So we are seeing a lot of upside movement in small caps. But again, if we go to the chart and we pull up the chart, it has room up to that 20-day moving average, and it is taking full advantage of it. But look at the prior low, which was at about 1548, and you got the 20-day now at 1550. I think the biggest test lies right in front of us.
Indeed. Absolutely. Hey, before we go real quick, where do you get your earnings data? A lot of people ask about that for your technical news.
I go to Zacks, but I also get a lot of information from briefing.com. Just the individual stories. So Zacks is just going to summarize everything. I mean, I could show you real quick here. I think we have a few seconds. So if I go into Zacks.com, earnings, I could go into the earnings calendar where you can see each day it listed. And then sometimes what I'll do is just sort by market cap. So this gives me the biggest companies. These are the ones most traders are going to be the most interested in. But I can see what's upcoming after the market closes: Starbucks, Kraft, Apple, and so forth. So that's where I generally get most of my information. But you can also go to briefing.com and get information as well.
All right. Excellent. Yes, we always get that question. So,
yep, no doubt about it. Final thoughts before we close out? I mean, anything left?
No, no. Like I said, just waiting to see if the bulls really are in charge right now. I'm just not so sure.
Yeah, I did take a lot of profits yesterday, so I'm not in on some of the same stocks I was in. But because some of those areas are not showing strength today, I haven't really missed out on much. So we'll see. Let's see how we finish today, and then we'll go from there.
Yes.
Want to thank everybody for joining us today. Please remember to complete the survey as you exit. We do love to get your feedback. Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Thursday afternoon, everybody. Be careful out there, and we'll see you tomorrow. Happy trading.